Good morning. It is Sunday, November 17th, 2024. It's almost 11 a.m. on the East Coast. This is Rob Sin at CEO Technician on X, at Goldfinger on co.ca. And this is Goldfinger Capital. Thanks for tuning in. Always grateful for your viewership and your attention. And before we get started, I'd just like to say a few things. In these videos, I'm basically always just talking to myself. I just, record it and post it for others to view. Take what you like from it, leave the rest if you don't like it. It's all good. I'm just talking to myself. And so I'm also talking to myself this morning about the importance of health, mental health, physical health, and really at the end of the day, health is wealth, and health is really all we have. Without our health, a lot of other things just don't matter, right? Like, the healthy man has 1,000 wishes, and the sick man only has one. It's a very powerful quote, and it is so very true. So let's be grateful for our health. Let's continue to be focused on our health and practice healthy habits, and when we have some unhealthy habits or something that's not working for us, to notice it and maybe make a different choice. So anyway, on that note, let's dive in, because we're drinking from a fire hose here in terms of the macro and the micro in November 2024. As always, if you get value out of this video, if you enjoy my content, please hit the like and subscribe button. I'm very grateful for that. It helps us achieve a bigger audience, which we are doing slowly but surely, gradually over time. There's so much to get to. As you can see, the tabs I have open, I'm going to do my best to get to a lot here, but quite frankly, there's no way I could do it justice in less than an hour, or even with an hour and a half. But I'm going to touch on the salient points and stuff I think is most important. And we'll start with basically the last 12 days, right? It doesn't seem like, it's clear that a lot changed on November 5th. Here's the November 5th SPY candle, the day of the US election. There's the gap higher the next day. 4 days of gradually rising prices, but eventually stocks ran out of steam at the beginning of last week. It reached a sentiment extreme, an overbought extreme. Just anecdotally, I had a lot of people messaging me, asking me, is it too late to get in? And that was like last Monday. People asking me if they should buy stocks, if they should buy Bitcoin. Nobody was really asking me about gold last week. Which is ironic, because gold obviously has been hammered since November 5th. But a lot of bullish sentiment. And I was talking to a friend of mine yesterday, and I feel like in the U.S., I'm just speaking for the U.S., that's the country I know best, obviously. That's where I live. We're in a honeymoon period here. I was at the park on Saturday morning, and families bringing their kids to play in the park with a Make America Great Again hats on, right? So half of the country is feeling ecstatic and euphoric and overjoyed and feel like there's hope again. I don't really know much about how the other half is feeling, aside from what I see maybe on CNN. The other half is bracing for an unhappy next 4 years, right? So it's a very interesting dichotomy out there. But I also have to feel like even a portion of that other half has a little bit of optimism right now. Maybe a small portion, but there is a portion of it, I think, that maybe thinks the economy will be good. Job prospects might be better. Inflation might moderate further. I don't know, but definitely in my circle of friends, there's a euphoria. Right? And I guess that says something about me and who I speak with. But there's an optimism. There's a sense of hope. And then me being the the contrarian. Oh, damn it. I guess you could call me a gold bug at this point. God damn it. I hate that title, but I guess in the scheme of things, in the grand scheme of things, I'm more of a gold bug than not, right? I see this a little skeptically. I think that January 20th might come and the honeymoon might be over and reality might set in, And Washington is a litigious, contentious place. There's going to be a lot of fights next year about a lot of different things, including the Attorney General appointment, right? I'm not going to get into the politics, but obviously it's going to be a contentious year. And I'm going to speak into this later, but humans are humans, no matter who they are, and no matter how great we think they are, they're fallible. You, me, everyone. We're not perfect. And power is corrupting. Power is corrupting 100% of the time. Give someone too much power, and even if they were of high integrity previously, they will get a little bit less integrity. They'll have a little less integrity. They'll start to cut corners. They'll start to do some things that might be a little bit unseemly. They'll use their power, right? That's human nature. The Republicans have a lot of power in a couple months, and so does Elon Musk, so does Donald Trump. We saw what happened in 2020 when the pendulum swung the other way. We saw some of the actions that were taken by one side, probably a little too far, probably a little out of integrity. Let's see what happens when the pendulum swings the other side, right? So anyway, yes, I have hope, I have optimism, but I also am a realist, and I don't know how long this honeymoon will last, right? So that's just my 2 cents. Now let's get into stocks. So Friday was a pretty ugly day. Now everybody can look at this chart and say that was a blow off, and now we're going to roll over super hard. It's possible. It's possible. But I think it's much more probable that if we do come down to this 50-day moving average in the S&P, maybe 576, 577, somewhere like that, the dip will be bought, especially if it happens this coming week. Turkey week is around the corner, so Thanksgiving seasonality is very favorable for stocks. We have a lot of corporate buybacks lined up into year end, so the buyback bid should continue to be strong. And yeah, there's some fundamentals out there. There's the old cash on the sidelines thing. I think there's a lot of pent up buying at lower levels. People who feel like they may have missed it at the end of October or the day before the election. Well, if they get another shot down at those levels, they're going to buy, right? That's just psychology. So I'm not too bearish here. Well, I can see the chart like every other schmuck out there and say, oh, it's rolling over after a blow off. Sentiment, look at the record inflow to U.S. large cap funds. It's a classic blow off. Sentiment got too bullish. I'll be interested to see how things go next week. I think a lot of what happened on Friday was due to the OpEx, the November OpEx. We had a lot of notional exposure expire, almost $3 trillion. And you could see that Friday morning. You could see that those sell programs just keep hitting. Anytime they tried to, the bulls tried to muster some strength, they were dumped into early in Friday's session. So what I'm saying is, to summarize, maybe a little more weakness early next week, but I think the dip will be bought. Regardless of whatever I think about the honeymoon period and how it might expire prematurely, I think we have tailwinds into year end. I really do, and I don't think there's a whole lot of reason to overthink it and try to get super bearish here. I'm just going to keep it simple and just add it there. And, like IWM topped on Monday and it rolled over hard 4 consecutive weeks, right? So if it retests this 227.50 level, which is basically almost there. It's a retest of the breakout. Now, I know I'm going to have my gap fill fans say the gap has to fill, the November 5th gap has to fill. Maybe, it might, but it doesn't have to. These gaps are just basically largely in our imagination, quite frankly. They're a product of volatility. And obviously, the day after election was a huge spike higher. It was a huge amount of volatility. Could the gap fill? Yes. Does it have to? No, it doesn't have to. That may have been a breakaway gap, right? And actually, stocks could catch a bid Monday morning and turn right back up again. Okay? I mean, it's down 4 days in a row. It's already on shorter time frames. The IWM is pretty oversold, right? So here's me putting on, I don't know, a neutral, but glass is a little more half full than half empty hat. I don't have super strong opinions in the short term, but if you give me some fat pitch long setups here in the next week, I'm going to take it. I'm going to take full advantage of it. NVIDIA is interesting. It got hit pretty hard on Friday, and then Barron's put it on its cover this weekend with a sterling article, bullish on NVIDIA. Great company, incredible performance, best stock performance of the last 25 years of any stock of a large market cap in the US. But it's kind of interesting that it just began to roll over and Barron's put it on the cover. So maybe chalk that one up in the bearish camp, but I wouldn't make too much of it. I think the Barron's cover indicator is losing some of its potency. So Turkey week is coming. Corporate buyback strong through the end of the year. Monetary policy. Powell, this is also one of the reasons why precious metals got hit and the US dollar has been so strong is basically the Fed seems to be taking a slower, more cautious rate cutting stance. It still seems like they're going down to 4% by early next year, but they're definitely talking a little more cautious here. I think that some of the recent, inflation data has them moderating their views a little bit. So they will probably cut in December. They probably will. They'll probably get to 4.5, but that's not a certainty at this point. That's like a 2 out of 3 shot, right? So it's not a 100% thing. So the dollar strength really is, I believe, the big story here of the last 10 days. And what we've seen in treasury yields. So first of all, this move up from the September low when the Fed cut 50 basis points is absolutely textbook. So the Fed finally cuts, they go 50, everybody says the Fed is easing, and what does the market do? It does the exact opposite. It tightens financial conditions for 2 consecutive months. This is an enormous move up in the 10-year yield. From 3.6 to 4.5 is incredible. In a straight line, virtually a straight line in 2 months. So now that everybody is drinking from the same Kool-Aid, that the Fed is going to go slower, the rate cuts aren't certain, the economy isn't as weak as was feared in September. Well, now would be a perfect time for yields start to come down again, for Treasury yields start to move lower again. If the Fed is really going to 4% in Q1, I would expect that 4.5 in the 10 years at top. Okay, that's a peak yield. That's an opportunity to buy the long end. To lock in that 4.5% yield. Okay, that's my opinion here. I think there's a very good chance that last week was at the very least a near-term peak in yields and maybe even a much longer-term one. Now, this admittedly surprised me, the magnitude of this dollar strength. So the euro dollar cross goes from 109 to 105 in basically a straight line since the election. I did not see this coming. I thought maybe we'd get down to 107.50 or something, but I didn't see this acute level of dollar strength that we have seen in the last couple of weeks. I mean, this is pronounced. Sentiment is just that. Again, it's Trump 2.0. So he's bringing in tariffs, 20% tariffs on all goods from China. He's going to put tariffs on autos from Mexico. He's going to threaten tariffs on the EU, yada, yada, yada. Tariffs. So this is accelerating the dollar milkshake theory, right? The theory that basically forget about everything else. The dollar is the reserve currency, and everybody's a lot of debts are in dollars. And so when dollars are not as freely available abroad, so when there's not as many dollars being sent from the US overseas, basically all the dollars outside the US get tighter, then there's a massive dollar short squeeze, right? And tariffs potentially accelerate that, right? That's the important thing to understand. Forget about, so this is what's hard, and this is what I overlooked when I was watching the election the night of November 5th. I was using first level thinking. I was looking at my Twitter stream being a dumbass and using first level thinking. I wasn't thinking deep enough about things. I always just say the budget deficit, the budget deficit, the budget deficit, the deficit, the debt, the debt, the debt. We're the reserve currency, guys. The U.S. can do stuff that no other country can do. And maybe you hate us for it. Frankly, I don't care, and I don't necessarily gain any. Well, anyway, the U.S. is the reserve currency globally. And that affords the U.S. some luxuries that other countries just simply don't have. I mean, there's no other country in the world could run a monthly budget deficit of $260 billion and get away with it, right? That's what the U.S. just did, right? The last few months, the U.S. has run extraordinary budget deficits. The annual deficit's going to be well over $2 trillion this year, beating all the forecasts at the beginning of the year, just like it always does. I mean, it's like Groundhog Day. The CBO puts out a budget at the beginning of the year. It's an estimate. And then the actual data is 300, 400 billion, 500 billion larger when all the numbers come in, right? Because spending is easy. It's hard to stop. It's not politically popular to not spend. Nobody likes to have austerity, right? You know, like austerity is not beneficial for politicians and the longevity of their careers, right? And that's on both sides of the aisle, right? You got to understand that. That's on both sides of the aisle. The Republicans are not gonna like to cut spending, okay? We're gonna see some major fights in 2025. But anyway, this dollar strength is so pronounced, so extreme across the board. I mean, the US dollar Canadian, 141. 141. It was at 134 just a few weeks ago. 141. So this is a problem. Well, I guess it's good for Canada, and they can sell a lot of stuff to the U.S., and maybe it's good for Americans taking trips to Canada. Things are a little cheaper for us, but this is a problem when these currency moves get so exaggerated and so far out of whack, right? And I feel like the rubber band is now really stretched in a lot of these pairs, okay? Sentiment is extreme, okay? Like, this is some of the most extreme Forex sentiment I've ever seen. The Canadian dollar and the euro have extreme negative investor sentiment right now. The Aussie is not far behind, but these two in particular, you know, if you look at the administration in Canada, I'll just leave it at that, the people in charge of Canada right now, and then look at the incoming group of people in the U.S., including Ramaswamy and Trump, et cetera, et cetera. Uh, it's, yeah, yeah. It explains some of this, right? Just the caliber of people that we're talking about here. But still, these countries border each other. They're very similar in a lot of ways. And if the currencies move too much, then trade will adjust and force the currencies back to mean, okay? Americans buy a lot of stuff from Canada the same way Canada buys a lot of stuff from the US, right? So, but this is dollar, milkshake theory is wreaking havoc here, and that's part of what's causing this. But just as a contrarian, somebody who watches sentiment, I got to look at this. These are very stretched, and we're likely to see a reversion to the mean in a lot of these dollar crosses over the next couple of months. Okay, it may not happen right on Monday, but it's likely going to happen. Okay, there's a lot of, I believe, excessive optimism about what Trump will be able to do on the budget side, and he certainly does not want a dollar that's too strong. He wants his economy to be strong. He wants to be able to brag and show and raise a gold medal for his economy, his stock market, his trade numbers, et cetera, et cetera. Too much dollar strength is not beneficial for that. And these two charts are just Goldsman. So the Bloomberg consensus on U.S. and Euro area growth, and then where Goldman is. So Goldman is above consensus on the U.S. and below consensus on the Euro area. So this is why Euro dollar is tough, because the Euro is a freaking train wreck. The Euro area is a train wreck. And if Trump gets really tough on the Euro area, I mean, it's rough. It's rough. Germany is a fading giant, a former, industrial giant that is in its old age. And its politicians have kneecapped it from a decade of dumb policies. Going woke, et cetera, et cetera. Euro area is tough. I mean, I think if I have to look at one place on the globe, spin the globe around, like where's the next financial crisis? It's the Euro area. The breakup of the Eurozone. I know that was a big topic back in 2010, 2011, 2012, but I wouldn't be surprised if Germany is the next Greece in the Euro area. And just there's so much friction in the Euro area right now, and I feel like the Euro experiment is getting into its final chapter. And if the growth actually follows this Goldman path in 2025, it's going to be a really painful year in the Euro area, right? But I still think that the Euro is way, way oversold here. And it's not in the interest of the U.S. to have too strong. It definitely does not want to be lower than parity, against the Euro. And that would be stock market negative, and that would be potentially a trigger for a financial crisis if the dollar strength got even more excessive, right? But we'll just leave it at that because I'm not going to spend any more time on that. So gold. Probably a lot of you just skip to this point in the video. So first of all, gold was overbought at the end of October. I think anybody, even a gold bull like me, when it got to 2,800, we were like, wow, really? 2,800? Well, why 2,800, right? And, putting a narrative on the price action after the fact is not particularly helpful, but I do believe, just for the sake of trying to understand maybe some of the market action since then, that there was a bet that the election was not going to be called that night or even the following day, that it was going to be a contested outcome, and that would send things into chaos. So there was maybe $100 at 2,800. Maybe there was $100 an ounce of a chaos bet there in that gold price, because every forecaster, everybody you looked at was saying this is 50-50. Like, it's too close to call. It's the closest we could possibly. And it really, if you look at the results, the country's 50-50. It's just the way the states are split up that Trump wins in the Electoral College by a landslide, by winning swing states by slim margins, right? It was not, if you look at the popular vote, the country is split 50-50. 50% of the country voted for an empty suit with little to no substance just because they couldn't stand Trump and the right? So anyway, I think there was a bet that it was going to be a contested outcome. There would be no clear victor. So as soon as there was a clear outcome, we saw gold start to trade lower. Late Tuesday night, early Wednesday morning. And it bounced for a day, but then the dollar strength just killed it, right? The dollar strength flows to crypto. We had just absolutely insane flows into crypto here. I mean, look at these crypto flows. Look at that. So 2024 has been a good year for Bitcoin and cryptocurrency, and the bet is that Musk and Trump and their cohorts are going to be bullish for crypto. So we have this huge flight into crypto. So all of it is just the last 2 weeks, everything is basically negative for gold. You have the perfect storm, bearish gold and silver trade, and here we are, we've sold off to support, right? It's not rocket science. We dropped from an overbought extreme with a lot of market participants making bets on a contested outcome or maybe even a Harris victory, which would have been seen as just more and more crazy deficits as far as the eye can see. And now we've reset back to support around 25.50. And frankly, I think this is a great level. I mean, this was a launch point in early September. Gold consolidated around this level for several weeks, and then it launched on a $250 an ounce rally. I think coming back to support is extremely healthy. Now, I don't have a crystal ball here. I think probably the 25.25 level holds. If it doesn't, that's obviously another level of problematic, but the 200-day moving average probably down around 24.15 or 24.20, depending upon when we get there. That's going to be the real test of the bull. Okay, if that has to happen, that's the real test of the bull market. Okay, but frankly, I could see support coming in here, dollar starting to cool off a bit, the yields starting to tick lower again, and the Fed getting more certain about another rate cut, before year end, and maybe gold bounces back to the low 2600s. I don't expect a major upside move here, between now and the end of the year. I think actually the most bullish thing would probably be a consolidation between 25.25 and 26.25. Okay. I wouldn't bet that we'd get much above 26.25 just with the sentiment headwinds that gold now faces prior to Trump taking office. Now, I think the whole ball game can change once Trump actually does take office, and the reality sets in. Like, this is not a panacea. It's not a panacea. It's not. Trust me, it's not. Trust me, it's not. This is a guy who's filed bankruptcy over half a dozen times. Roy Cohn was his best friend and lawyer for a very long time in the early part of his life, in his 30s and 40s, essentially. Yeah. So it's not a panacea, guys. And I think his mental function is also reaching its end. So it'll be other people probably calling the shots for him. It's not a panacea. It's really not. Silver support at $30 an ounce. Captain Obvious, the 200-day moving average is just under, right? So silver is even more oversold than gold is. It's had an even more extreme drop, as one would expect. But I think it's a normal, drop to support. Okay, it got overbought at $35 an ounce, the same way gold got overbought at $2,800 an ounce. And I think it's also worth looking back to late October and just thinking about some of the sentiment that was going on at the time. I think everybody was bullish, including me. We got a little bit too cheery in our thinking that it was all sunshine and rainbows. But when you're up 40% year to date in gold, you have to take a look back and say, hold on, this may be a little too much in 1 year, right? And sure enough, it was. We've also seen the futures, really the net length of the large speculators come off considerably. We're talking about well over $10 billion of net notional length has been, it's been unwound in the last month or so. So it is a reset in precious metals, and it's a healthy one. All bull markets experience these, resets. So Dan Oliver is a fantastic writer. All of his content is really good. And I think he explains it really well. I mean, the federal deficit, the total debt, situation, the fact that it needs to be, refinanced at higher interest rates. And even if spending is cut considerably, we're still going to increase the debt, right? We cannot stop it from ticking higher from here. It's just gotten to the point of no return. And there's no way they're going to cut this much spending, right? There's just no way, because their own party won't agree with it. Politicians are not going to vote to cut out their spending for their states, their counties, their cities. They're just not going to vote for that. That is the way to ensure you will not be elected dog catcher. And he puts it exactly right. And if Trump does somehow slash spending, we may applaud, but it will be sure to throw the economy into a downturn, and the R word may come about. And also, president will be the last time that a Republican is president, perhaps forever, right? So there's a lot at stake here. There's a lot at stake because the tendency is for the country to flip every 4 years, right? There's just the tendency is one party is in, they get to have their chance to, run the ship for a while, and then, they get a bunch of bad press for all kinds of stuff that they do, and then the other party wins, right? So if Trump manages to cut spending, well, it's going to be unpopular for most of the country, and it will ensure that his party probably won't win in 2028, regardless of who the candidate is, okay? Yeah, we know about sentiment. It definitely got extreme. It went from 37% bulls on October 23rd to 50% bulls on the 13th. So 20 days. And all of these people that were onshore and in the middle flipped from being in. the neutral camp to being in the bullish camp, right? And so that sort of lends favor to a local top, sort of a near-term top for stocks. But then you have this where we have bullish tailwinds as well into year end. And with all that cash on the sidelines in the money market funds, I mean, it's gargantuan amount of cash on the sidelines. So even after May 2020 quantitative easing kicked in and all those government funds got poured out to support the economy during the pandemic, we were still below 5 trillion because obviously, the interest rates were lower at the time. But now people can get 4.5% in these funds. It's much more attractive. And now they're holding 6.7 trillion. So 6.7 trillion of pent up potential buying on the sidelines. Well, that is a bid right underneath stocks and a lot of other assets, quite frankly, right? And that's also why, even though you could make a case that the headwinds are here for gold, I don't think it's going to actually be a bear market, okay? And I'll give you one anecdote from last week. So I have a friend of mine who has been holding millions of dollars of gold for years. And just seeing the price action and seeing the sentiment swing over the last 10 days, he sold a big chunk of his holdings last week. So we're talking about physical gold. We're talking about millions of dollars worth of it. And he sold it at 25.25. So he sold it basically at the spot price low last week. So the dealer who bought it from him probably did pretty well. Probably turned a, I don't know, $50,000 profit in a few hours. But he just wanted to cash out some profits and put it into a money market fund. Right? So he's one of these investors who are propping up this cash on the sidelines. And he was also a gold seller. So this is a guy who has held gold for a while. A good trade for him. But just seeing some optimism about the economy and where things are going and potentially lower deficits, he decided that gold is not as favorable. So we'll see if he's right on that trade. He definitely took a bit of a hit to offload that and get the cash, but he figures he's got a profit, a big profit from when he bought it, and now he can put the cash into a money market fund and get 4% plus interest on several $1 million, and that's enough to live on, right? Anyway, just an anecdote, because I don't often hear of people selling that much gold, or especially physical. It's one thing to sell the exchange traded fund, but to actually get all those bars or coins out of a safe box, transact it at a dealer, have them write you the check and do all that stuff. It's cumbersome, but he did it because he really felt like maybe it was the right move, right? And that's also the sort of stuff that we see happen at bottoms, right? I'm not saying it is a bottom, but that's the sort of stuff that we see happening at bottoms. And Dan Oliver, he emphasizes it's done that, Trump 2.0 has done nothing to change the underlying gold thesis, and that is the world is in a massive credit bubble, right? And there's no coming back from this, right? And the solution to it is currency debasement, right? Currency debasement. The only question is the path, right? The path. So do we have the dollar short squeeze first before the debasement really bites, right? Or do we just go straight to the Fed allowing higher inflation, allowing the dollar to debase gradually over time, right? That would be the more gentle path higher for gold. If we have the dollar short squeeze first in a financial crisis, then we get a gold washout first prior to a gold surge to new all-time highs. So it's a path question, and I don't think anybody knows the answer to that path Um, and yeah, the fiscal situation is the worst it's ever been, right? It's the worst it's ever been. And the way the Democrats are winding up here at the end of this year, running a $300+ billion deficit in August and now a $257 billion budget deficit in October. Wow, Trump's going to be walking into a real mess, right? And you don't turn a ship like the US government that quickly. Whatever Ramaswamy and Musk want to talk about, if they just go in and just start firing tens of thousands of federal government employees, you're going to see protests across major cities. The economy is going to dive lower. It's not that simple. It's not that simple, right? It's just not that simple. Miners obviously have been trashed. I don't need to say that, but we're at support. And I'm just going to, for the sake of time, just going to use Kinross and Newmont. Newmont is at support, $40 a share. Horrible stock. We all agree it's the biggest gold miner, but it's the worst. Everybody hates NEM. It sucks. Never buy the stock, but it's at support at $40 a share. It's super oversold on shorter time frames. It's in a new bear market. The magnitude of the drop from the October 23rd high after earnings means it's in a new bear market. But stupid, dumb old me, I'm willing to own it off this $40 support level for a bounce, maybe back to 46 or 47. You know, if I get lucky, it's not a long-term investment. Obviously, the report, the Q3 earnings report, was basically an admission that even at $2,500 gold, this company has challenges, right? Yeah, they made money. They had a record free cash flow quarter, but they're supposed to do that at $2,500 plus gold, right? That's what they're supposed to do. That's what the market had priced in. That's why it had been going up to $58 a share for several months, but the valuation was just excessive when you consider that their cost to mine an ounce of gold is still $1,600. They're not able to expand margins the way the market was hoping, right? So instead of getting $1,000 or $1,100 margin, they're still at $900 or $800, right? So they're not expanding margins, but Kinross was able to. Kinross has a much better chart than Newmont, and Kinross is also at support at $9.25 a share. I think this is a buy here as well. So, you know, whenever we say buying a gold miner, well, if you think the gold price is going to fall to 2,300, then you don't buy a gold miner here. If you think gold's going to stabilize and maybe trade in a range for a bit, then you could buy KGC or Newmont here. But I think Kinross has righted their ship. Things are going a lot better, and I think that you could hold Kinross longer term. All right, so natural gas. So LNG, Cheniere Energy, just keep it simple. This was trading in a range-bound consolidation for over a year, and it broke out with force in the last few weeks. You know, it's tough to just advise chasing a stock, but the fundamentals here, as I laid out in the Substack post, so this is free, it's up on my Substack, Goldfinger Capital. Please like and subscribe. Read this one. I lay out my bullish thesis for U.S. natural gas. So Trump, January 20th, LNG terminals, passing executive order probably, more LNG terminals. That's bullish for U.S. natural gas. I'm not going to go into it because this video is already too long, but bullish for natural gas. Yeah, natural gas got smacked on Thursday, but this is still a positive chart, right? I would rather view it's rising. It's in an uptrend since August, above the 50-day moving average. Obviously, 3 to 315 is a big key level, potential breakout level. You can zoom that out longer term. When natural gas gets going, it has a strong tendency to trend like a mofo. This market can trend, and it can trend both ways, and it can rip your face off both ways if you are positioned the wrong way. But this is a big, beautiful base that's been happening for 2 years now. I believe 2025 is the year. that we make natural gas great again. And great again could mean $5 plus. I don't know. It's possible. It seems pretty far away here, but it's possible. LNG is a great way to play it. The technicals confirm that. So bullish on natural gas. And this post on my Substack lays it out. Crude oil, yeah, I mean, what can we say about crude oil? It's not great. It's been trading pretty sluggish. Dollar strength is a negative, obviously, for crude oil priced in US dollars. But I also feel like, we're at support. Sentiment is very negative on it. I mean, anytime I post anything about oil or oil stocks, it pretty much gets very little attention or even negative commentary. That's usually what happens at a bottom. So I don't know. We'll see. OIH, I still like this as a Trump trade. Drill baby drill is good for the oil services sector. 307 is the breakout level. 307 is the breakout level. This is a big, nice base. It continues to trade like crap. So does Schlumberger. Very similar chart pattern. 46 is the breakout level on Schlumberger, but I still think you stick with the Trump trade. VLO, the refiner sector. This is a very strong seasonal trade. The final 3 months of the year into January, right? So I think that VLO is a buy here. Hold it until January and sell it. So Trump trades. Another Trump trades is medical psychedelics. MNMD, Cybin. So a lot of people suddenly on this medical psychedelics trade since November 6th. And I'm reading more and more people talking about it, right? So there's a big short interest here, but I got to respect Friday's breakdown. Let's see. So I got no position here in MindMed or Cybin. I traded it, bought, sold. Made a little money, but right now, after that breakdown at the end of the day on Friday, let's see what happens here. Let's see if 750 support holds in MindMed and reassess. But this looks like a blow-off. It looks like a lot of people came in late to the party at the end of last week and got flushed at the close on Friday. Cybin actually has a little bit better near-term fundamental drivers in terms of news flow. So even though I don't have a position in here, it's definitely one that I may trade, like day trade. Just a little better news flow, right? And they're both companies are very cashed up and well funded for the foreseeable future. Cybin seems to have a little bit of a tighter share structure, better news flow, and I don't think as many people have Cybin on their radar as MindMed. All right, we wrap up with junior miners. Okay. So I chose three. American Eagle Gold. We know about this last Monday. South 32. Big investment. $29.16 million at a 15% premium to market. 87.5 cents a share. And I lay out all the key terms here in my Substack post. No finder's fees, no ROFR. That's huge. That's huge, not having a ROFR. So you get a major in, gives the company cash runway for 2+ years, probably 3 years. They can drill the crap out of NAC, and there's no ROFR. So another major could come in, like Tech, and make an offer, and South 32 is just another shareholder. They don't have any special rights, right? Chart looks great, and actually, it got up to 97, it dropped to 81. It's trading around here, but it's trading around the deal price, right? And that's what you would expect it to do. And so technically, it's not overbought. It's cooling off a little bit here, and maybe it will continue to cool off early next week, Monday and Tuesday. The next piece of big news will be Tech either topping up to keep their pro rata 15.2% interest, I think it is, or saying, no, we'll pass for now. And they get diluted down to 13.4%, but they can still then later on, choose to keep their 13.4% stake if there's another subsequent financing, right? So this is, if tech, decides not to hold at 15.2, the market may view that as a near-term negative. If that happens, I think that'll be a buying opportunity. Like, for example, if the market drops back to 75 to 80 cents, I would say that's a buying opportunity, because now, even if tech decides not to top up, AE has $37 million in its treasury. We've got assays coming for 11 holes, pending assays, including the 4 north holes. And then they may mobilize for a drill program in January and February. They may mobilize early. So it's not like there's going to be a long period of dormance, a dormant period here in the news flow for AE. So I believe if dips happen, I want to take advantage of it. If tech tops up, then shoot, you could go above $1, right? And then we got the assays coming, and obviously the assays will be the big market mover. And Tony said, basically, the CEO, that as soon as we close, I think it's November 25th, November 26th. So, so maybe at the end of that week, I mean, that's Thanksgiving week, so I'm not sure they'll put out assays on Thanksgiving week. Even though it's a Canadian company, putting out assays on Thanksgiving in the U.S. is a pretty bad idea. And that the Friday is a short set. So maybe it'll be the following week. So that'd be like November 30th or around that time frame. So anyway, in 2 weeks, we'll have assays coming out from AE, and that will be the big market driver for this company. So either way, I think if it dips, if tech says no, buy the dip. If tech says yes, then boom, probably above $1. And the company will then have ridiculous amount of runway, $42 million in its treasury. So AE, a lot is working for it right now. And obviously, this really is a game changer, transformative investment by South32. And I read some commentary by some people saying it's a head scratcher why South32 would do this. And while some people may say that because they just have a very skeptical and negative view of junior mining companies, and nobody can make a new discovery that's great, or they don't like BC, or they don't like Canada, the fact is you have to go where the big ore bodies are. You just have to. So even if it's in an area of BC where there's First Nations you have to deal with, you have to give them their piece of the pie eventually. Well, that's just the way you got to operate. But the most important thing is the big ore bodies. Big, special, higher grade ore bodies. But the key word is big, right? And so NAC has the potential, just based upon the drilling to date, even the drilling from the 90s, which is not a secret. Yeah, there were drill programs here previously. And actually those drill programs have helped AE with some of their targeting. But the body of evidence, it's a big body of evidence and a lot of work, a lot of good work by the AE team over the last 3 years, is that this is a very large copper and gold ore body that has substantial room to grow larger in scale over the next couple years, right? And that's what this company is going to do. They're going to drill this baby and they're going to make it bigger. I mean, if it's there, they're going to find it, right? And so that's going to be the question. As an investor, the question you need to ask yourself is, do you think this is a good management team that's aligned with you, the smaller shareholder? Do they have skin in the game? Do they care about your capital the way that they care about their own capital? And then the ore body, is it there? And that's obviously a more difficult scientific evaluation to make. But if South32 just cut a $29 million check and they think it's there, well, that's a pretty good validation from a company that may have many scientists who this is their expertise, is to evaluate these porphyry projects. So I'll just leave it at that. Hercules Metals. Okay, so this one has been probably my worst pick of 2024. I think so. Obviously, those who have been following me for a while know I bought it on October 10th, 2023. I made a very profitable trade on it October, November 2023, got out of it for a while. and then couldn't help but buy back in, especially on those dips in January after they put assays out for whole 23.21 and 23.26. The dips down to like 65, 66 cents, 70 cents. Those were great dips to buy. And I've been a big holder this year. Well, now here we are at 49 cents. So I'm underwater. I'm down. I'm down pretty big on this investment, I admit it. Just from a price standpoint, a chart standpoint, I've been wrong. No big deal. I'm going to be wrong a lot in the stock market. Stock market's tough, and not every pick is going to be, like an American Eagle Gold from 12 cents to 97 cents, or a Hercules Silver back in 2023 from 25 cents to $1.62. Those just don't happen that often. And when they do, count your blessings and hopefully, you got a piece of it, right? But now, so where are we now? Why is the market so down on Hercules Metals? Well, I think part of it is a copper sentiment story, right? I just think that copper's dropped from $5 to $4, and that's a big difference at the margin for the junior mining speculator. At $5, they think copper stocks are way sexier than they are at $4, and they're right. $4 really isn't that sexy a price for copper. When you look out across the spectrum of producers, okay, and their cost, their marginal cost to pull a pound of copper out of the ground, I mean, most of them are above $3, quite frankly. Unless you're just the best porphyry ore bodies, like the ones in Chile that are just like super gene blankets out the wazoo, 2% plus chalcocite grades, and it's just near surface. Yeah, okay, that's beautiful. And maybe your costs are $1 a pound. But most ore bodies that aren't just the world-class ones, when you add up all the costs to build the mine, to operate it, all the expenses that go along with it, including taxes and such, your costs are well above $3 a pound. So $4 is not a big margin for a lot of these big companies. It's not a big margin. And it's not a high enough incentive price to build new large-scale projects, right? With the inflation we've seen across the global economy since 2020, to build a big new porphyry mine, I mean, $1 billion is your starting point, really. And usually it's more like 2 or 3 or even 4 billion, right? So that all that cost comes up front, the cost of capital. You're usually talking at least 10% interest. So do the math on all that and then calculate out your cash flows out, whatever, 15, 20, 25 years, and do the math. It's not compelling at $4 a pound. It's just not. I'm just being honest, right? So that's part of why Hercules is down here at 49 cents. The other part is the drill program has been, it was slow to start, excruciating the first few months of 2024 drilling with the core rigs going through the upper plate, the 200 to 300 meters of cover, depending upon the location of the drill hole on the project. So it hasn't been great, right? But some green shoots here. This NR from November 4th I thought was excellent. And I made a video with my sinus infection talking about why I thought it was excellent. But just to summarize it quickly, they found the potassic zone in 3 consecutive holes. And they're basically inferring that they clipped it in parts of hole 2321, 2326, 2406, et cetera, but most importantly are the new holes, 2420, so 2420, 2421, and 2419. And so it's expanding this whole zone here to the southeast, which is way the direction that they were kind of thinking the porphyry was plunging. So the pieces of the puzzle are adding up here, and I think that's very positive. So more information on those 3 holes would be fantastic. And then I think that this was not well understood or maybe overlooked a bit, but the fact that a separate zone of early biotite, again, potentially potassic alteration, the core of a potential porphyry center, was also encountered at depth in holes 24-8 and 24-12. A separate intrusive center to the north. So Grade Creek was one of the areas at the beginning of the year that we were looking at in the geophysics back in April. This could be a potential porphyry center up here at Grade Creek. But then the program started. There's like these holes that drilled into like a leach cap, 2403, 2402, and they shifted back down south to Belmont. Then they had that hole, whatever. The program started off on a rough footing, right? And it appeared to have regained their footing at the end of the year. We will see. I'd like to see the results of hole 24-12. I'd like to see the results of all the holes, especially these three more recent ones, 19, 20, and 21 down here towards the southeast. I think that's going to be really telling, some big information. But if there's a potential, a separate intrusive center, so we have one down here, and then potentially one up here, well, that really opens up the map. And remember, I don't have the deck up, I don't have the bigger map up, but this is just one small postage stamp part of the total property package. And they haven't even drilled over here to the east yet. And look at all the copper and soils lighting up here. So that's always been a question. What is that? Is it just that the fact that everything is plunging to the west, so the porphyry is higher up here, it's actually daylighting at surface, and so you're just getting the copper and soils because the Triassic is daylighting here? Yes, it is, but what if this zone that they tagged over here still extends further to the east? Like, what if it's actually extensive all the way over here, right? And part of this fault block to the east that's so well lit up by copper and soils actually has the early porphyry, the one that brought all the metals to the party, there as well, right? I don't know. So they need to drill over here in the east to also test that theory. And then there's that big cut, the scarn expression over here. That could be interesting to test that as well. There's a lot of unanswered questions, a lot more drilling to be done. But here we are at the end of the season, so most likely that's going to be done in 2025. From the chart perspective, it's obviously in a downtrend. I don't think I need to tell you that. But some potential positive signs is that we have support showing up here around this 46, 47 cent area. Could be a double bottom. It's way too early to tell that, way too early, but a little bit of an uptick on Friday after making another new low. So I don't think anybody can say that they could be super optimistic. They can say, oh, that's it. But hey, the potential is there. Both of these candlesticks bottomed at the same price level, right? So we'll just leave it at that. And then First Atlantic Nickel, FAN. I love the symbol. I love the symbol BIG. I love the symbol FAN. I like putting them together, big fan. So FAN started drilling in October, and that's when the share price bottomed and it moved up. So it's had a big move. It went from 8 cents to 23 cents, maybe too fast in the near term, maybe. But I would like to see it consolidate around 15 or above 15. I think that maybe 15 cents is a potential new support level. And the most important thing to know about FAN is this map right here. This massive magnetic anomaly. It is absolutely massive. 30,000 meters in strike extent from bottom to top. The width, I think in some areas it blows out to 4,000 or 5,000 meters, but it's a very large area. And this NR they put out last week was focused on a new discovery at the RPM zone. 394 meters of drill core with awaruite. Awarite. 10 kilometers south of the supergulp zone. So they've already hit Awarite at supergulp in the first hole of the program. Supergulp is here. And here's RPM all the way down here at the south. So you see 10 kilometers. So they're hitting, I mean, basically, according to what they say here, they're basically hitting Awarite, which is basically, you know, nature's version of stainless steel. It's high quality, you know, nickel that doesn't need a smelter. So the metallurgy is far superior to sulfide or laterite versions of nickel. And the scale, so they're just, let's keep it simple, stupid. Great, you know, metallurgy. The best that you could possibly get for nickel. Okay, that's number one. Check box, you know, number one. Number two, potential scale. The mag anomaly shows the potential scale. Massive trend that has barely been drill tested. Three, they're hitting in basically every hole so far, and they've made a new discovery at the RPM zone, which also is lighting up with samples from surface, right? So you can see very strong number of red stars here at Chrome Pond and RPM zone, and then up here at the north, you know, at the Atlantic Lake zone. So you have big anomaly stretching 30 kilometers here. So you have scale. It's at surface. It starts at surface. Like they're drilling through less than 10 meters of cover, and then they get into the Awarite, right? Boom. And then it's continuous for over 300 meters, right? So that's fantastic. Also, this is an area with good infrastructure near. It's got, you know, water access to the Atlantic Ocean, right? And no First Nations. So most areas of Canada, there's a First Nations group or multiple First Nations groups, but in, you know, Newfoundland, no, right? So that also makes things a lot easier, a lot better from both a permitting and a potential, you know, economics standpoint. So a lot of boxes checked by First Atlantic, but look, it's early. It's early. First drill program at this project. You know, let's not get too carried away and overly bullish, but it's very promising. And the valuation is pretty low. The share structure is pretty tight for FAN. A lot of things to like. And I'm long on AE, BIG, and FAN. I'm going to leave it there. Thanks for watching, and have a powerful week.